Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only. And now we've got that out of the way. So I'm finally back. I had my first week off on holiday in many, many years last week. So apologies if you guys missed a Bitcoin video last week. But I'm back now, and I'm gonna crack on. So let's run through the Bitcoin chart, shall we? We'll talk about what's happened so far over the last few days and what I'm looking for next. Okay, so first things first, we'll zoom in, 30-minute chart. Let's make this big. There we go. So obviously I came back from holiday at the start of this week, and quite frankly, I've only taken 2 trades so far this week. And there's something that you can learn from that. Is I only want to be taking high probability trades. I'm talking specifically about Bitcoin here, purely about Bitcoin. This is already Thursday. I came back to the charts on Monday and I've only taken 2 trades. And I'd argue that there was 3 trades that you could have taken that were high probability. Okay. And this is where a lot of newer traders go wrong. They just need to be in a trade. They need to be every single day, every single hour, they need to be in a trade. And quite frankly, you don't need to do that. Okay, if you know statistically what your high probability trades are, then you only take those high probability trades. And then that way, by the end of the week, you can be profitable. Okay, it's a big thing that people need to learn. So just really quickly, the only trades I've taken this week, and again, if you want full breakdown of these trades, they are in the free Discord. There's one thing about our free Discord is when people post trades in the profit shots area, it's not just a clout profit shot with a percentage on it, and it means nothing. We ensure that we post the full TA, so the reason why we took the trade, the entry criteria that we got, and why we're taking profit, and that's in the free group. Okay, so if you do want to join the free group, the Discord link is down in the description, and you can learn from all these things. So I'm not going to run through everything in detail here. So if you do want to figure out this, then have a look. But quite simply, we'd come up, we'd taken some highs, we've run some liquidity, we were above the weekend highs. Okay, and then lower time frame for me, we had a bit of Elliott Wave going on. I was scalping this at the time, and effectively we had a nice ABC here, an expanded flat into a 0.5 fib, and it was developing day value area high. So really nice confluence for a short. We had quite a lot of confluence in that zone, and that ended up giving us a really nice short to the downside. Okay, so this is what we had here. A lot of people, again, you're coming up towards the high, and this is what typically happens. Happened again last night. If you get up towards the high, you know, your influencers on Twitter and YouTube start posting emergency updates. Bitcoin's looking bullish, yada, yada, yada. And that's basically, these influencers think how standard new retail traders come into the market. You know, price moves up, they get excited, so therefore they want to press green. But then what happens? Price goes down. When price goes down, people get, oh, it's bearish, so they want to press red. And then, obviously, it turns around. And this is just how markets operate, especially when you're range-bound. Zoom out. It's gone sideways. This has gone sideways since before I went on holiday. After this drop down here, we've just gone sideways. We are in a range. Look at that. Range highs, range highs, range highs, range highs, range highs, range highs. Okay, range lows. EQ, point of control, it's sideways. Okay, so anyway, so with this trade here now, a bit of a technical trade to get for this. Now a lot of the guys in the group, especially the guys that have learned from me, had a really nice entry down here, which was previous day point of control, not fulfilling the 80-20, but only partially fulfilling the 80-20. So a lot of the guys in the group caught this trade, which was the reverse trade. I didn't take this one. I was cooking tea for the family at this time. And as we were saying in the updates yesterday for the guys, is we had another 80-20 potential on the cards. And if we fulfill the 80-20, which means fulfilling the previous day value area, then likely it is we're going to come up and contest these highs. So a lot of the guys in the group ended up getting this really nice trade on the back of it. And then for me, last night, again, you know, your influencers, your cryptos of this world, your idiots are going, oh, look, you know, it's bullish, and then they're posting emergency updates. So in the end, we got a really nice scalp trade all the way back down, but I didn't trade this all the way back down. I took this as a bit of a scalp, which was absolutely fine, but either way, it was a nice profitable trade. So there were the 3 most profitable trades that you could have had this week. Arguably, could you have taken that longer? Yeah, of course you could. But hindsight's a wonderful thing. Okay, hindsight's a wonderful thing. So yeah, I know, again, if you want to learn from these are all posted, the actual criteria for why we've taken these trades, the confluence, why we've taken profits, where's the invalidation. It's all posted in the free Discord. So obviously if you want to learn from that, then you can do. And obviously if you want to learn how to get these kind of entries in the first place, then pop over to our website and come study the course material, you know, for a grand total of 79 Great British pounds. You can have access to over 83 modules now, in-depth modules to learn how to trade like a consistently profitable trader rather than following the LARPs. Anyway, now we've got that out of the way, let's zoom out. Let's talk about what's going to happen next. Okay. Again, I don't know what's going to happen next because I'm not a LARP and I don't have a crystal ball. I wish I did. I'd be the most richest man in the world. And trading would become very boring at that point. So, we've got the range. We've got the volume profile. Okay. So, quite simply, this volume profile, by the way, keeps changing. As price develops, the volume profile will change. Just keep pulling it along, okay? Keep pulling it along. And you can see here, before, with this rejection here, if we pull the volume profile back, before that happened, value area low was here, okay? Reject, 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 okay? But as price develops, we continue pulling it along. Now, value area lows move down. Now, is this a reclaim trigger for me to long? No, it's not. Okay, and this is what you got to take into context. Because of the fact that this is effectively range bound here, this isn't a reclaim trigger because this is fairly sloppy price action. You could argue that we're forming this rounded bottom, which in effect we are, but that doesn't mean I belong in here because effectively my stop loss needs to be all the way down here, or if you're going to do even lower time frame down here. It's not for me, is this. I'm still holding along from lower, and if we flip some key levels, then yeah, I will take some more intraday longs. Okay. So let's talk about, first and foremost, resistance. What have we got above us? Okay, so you guys know I will always say the same thing. Point of control EQ, value very high, range high. But we do have some intraday levels in between this, and this is what I really want to point out to you, hopefully to stop you from aping into some daft trades. So let's just bring up the opens. Okay, I'm not really bothered about the daily open. Not really bothered about the weekly open. Let's talk about the monthly open. Okay, so first and foremost, locally, we do have a lot of liquidity above us. Now, what do I mean by liquidity? I just mean stop losses. Okay, anyone that's been shorting actively within this range here, where are the stop losses going to be? Well, there's going to be a batch of them above these equal highs here. And then there's going to be another batch above this pivot here. So that's first and foremost what we have to take on board. Because with stop losses, that means that's where the liquidity is at. Stop a few people out. The larger players can fill their limit shorts if they're going to do it. So therefore, if we do pop up into this zone, we start to run some stops. So the two most local levels that we've got to pay attention here is, do we just pop up here and then start to break some local structure on a lower time frame? Yeah, great, cool. We've got a low time frame short trigger. Okay. Now, my preferred scenario for this would be to run up above this high here. Okay, my preferred scenario will be there. We've got a naked point of control up here. If we do run up here and start to turn around, great, cool. Right, so that's one area that we've got to be aware of, because this could cause a pullback. Anytime you take out a major pivot where there's going to be liquidity, likelihood is low time frame, you get a pullback, which is why, again, another reason why, you know, if we zoom into this here, this is why low time frame, like breakout traders, get destroyed, because they'll come up here and price will come above this high and they'll go, yeah, great, this is a long trigger, moon. And then what happens? Well, it just normally pops up and pops back down. And the reason why is because it's stopping people out. Okay? It's stopping people out. So it often ends up in a pullback. Now, I'm not saying it's a full-on pullback and that's it. We're going straight down to, like, you know, 1K Bitcoin or whatever. Some stupid targets that people make up. Okay, I just mean it causes a pullback. So this is why when you get these breakout traders and they go, oh yeah, once it breaks above this V pattern, W pattern, whatever pretty pattern they're trading, you know, they'll do this. And because they can't trade for shit, they go, oh yeah, really tight. I'm gonna go 100x on this. Yeah, I'm targeting. I'm gonna target up here. Spitty says there's resistance around the EQ, so I'm gonna target this. So that gives me a 58 hour trade. Great, cool. 100x leverage all in, and then they just get destroyed. Even if it's just a simple pullback for another higher low and higher high, they get destroyed for no reason. No reason. Purely through FOMO, purely through greed, and because they haven't got a clue how to trade. So they follow the wrong people, quite simply. So, first and foremost, that's what we've got directly above us. Okay, so this is the most local resistance. I'm going to use that top one first. So if we can get above this without a significant pullback, the next wall that we have to get above is monthly open. Bear in mind, monthly open is significant because we have been in this range now, going sideways, effectively, for how many days? 174 days. That's a lot of months going sideways. Okay? So monthly open is a significant level to get beyond. So if we can get above monthly open without a significant pullback and continue grinding up, then we get to the first major resistance, okay, which is obviously point of control and EQ, okay, of the whole range. Again, this range has been going on for a long time. Now, if we can flip that and start getting higher, then realistically, the odds start to turn in favour for range highs. Now, I'm not saying it's a guarantee because this is trading. This could come all the way up here, 73k, front run, the all-time high, and nuke. Of course it could. Of course it could. It can do anything. It can do anything. We've just got to trade the probabilities, but the probabilities start to favour the upside if we can flip the point of control. If we start flipping the point of control, this is the next area to contend with. If we can flip that area, then liquidity above these highs. If we can continue flipping these, then yes, then we start talking about all-time highs. Now, all-time highs, that doesn't mean, oh yeah, great, all-time highs, we're just going to break out of here and that's it, moon straight to 100k or whatever random made-up number people have come up with these days. We then have got to ask us a question, because at all-time highs, quite simply, what could happen, and again, nobody knows this is the magic of trading, we could just pop over, get everyone bullish, get all the breakout traders piling in, getting all excited, and then just reverse. Again, a lot of liquidity. Great, cool. Especially if people do start aggressively break out long in this and price doesn't move. I always say the same thing on this channel. What are people trying to do? Well, in this case, they're trying to market long. Are they pushing price up? Are they doing a good job? No. And it starts reversing. Great, cool. Well, in that case, we've got a hell of a lot of trap traders up here. Let's reverse it. Okay. If not, if we don't get a full-on reversal, then yeah, we'll look for higher prices. Once again, I've still got my eyes on that 77k region. Okay, still a big region. Flip that, then yeah, we can start talking about higher prices. And that's when the bullish Elliott Wave counts stay in play, and we can look at higher targets. Okay, now, there are all the resistance zones. Now, what do we have in terms of support? Okay, in terms of support. Quite frankly, we do have intraday support levels within this. We do. Now, my line in the sand, realistically, for still being fairly bullish, is around 53k. We've got naked point of control down there. It's kind of my line in the sand, because if we start losing that 53k, then likelihood is increases that we come down to contest these lows. Now, does that mean we're going to absolutely nuke? No, it doesn't. It might do. If we do start losing this, then we might just pop down and pop back up. Who knows? We could do that. Alternatively, if we do start losing this and coming down lower, then all we do is what we've done for months on this channel, is still volume profile from here. Absolute lows up to absolute highs. Look at this. So if we do lose this low and we start coming down, well, where's all the volume? Well, there you go, around yearly open. We've got a lot of volume around yearly open. Now again, this isn't just a straightforward level. A lot of people watching this will go, oh, I'm just going to set a limit order there, then Spitty says yearly open's a good level. Well, yeah, you could do. But what happens, it just goes straight through. This is high time frame now. So if price does come in to this territory, if it does come into this territory, then you've got to ask yourself, right, well, what's it doing in this territory? People get really panicked and go, oh yeah, it's just going to wick down and then bog off without me. People get really panicked. But this is talking very high time frame here. You know, this is talking weekly time frame. So we could come down here. Yeah, we could wick down here and then wick back up and then spend a bit more time down here. And then within this here, that's where the big question is. Does it give you your entry trigger? Does it show you some strength? Does it look like it's going to turn around at this point? Well, great, cool. If it does, great. You know, you don't have to be going for the clout and catch an absolute wick. Like, you didn't have to catch that absolute wick and go for clout. You could just let price stabilize and then get involved. Okay, this is where so many people go wrong. They're so panicked when big moves happen fast. They're so desperate to get in because they want to catch the absolute bottom. But unless you're planning on posting screenshots on Twitter and becoming the next influencer, it's pointless because you're just likely going to blow all your money in the process of doing it. And then when you finally get it, the price needs to run to 500k just to make back your losses. Okay, so this would be my next major area of interest. If it loses that, where's the next volume? Well, you've got some volume down here. Great, cool. Does that give us anything to work with? Cool. Where's your next volume? Well, your point of control of the whole uptrend is down there. All right, cool. So all we'll do is we'll look down there. All we're looking for is, where is the volume? Where is the highest confluent zones? Not just volume, lots of other things. Okay, lots of other things. As you can see here on my list, I've got so many things here, it's unreal. Because I'm trying to overlap as many things as possible to give me the highest chance of catching a trade. Okay, if I don't have a lot of things overlapping, which is what I call confluence, then there's no trade. You know, if it's just one or two things, I'm not really bothered. If I've got 3, 4, 5, 6 pieces of confluence in an area, great, cool, I've got a trade. As long as it gives me the setup. Okay, so that's all I'm looking for. So that's the downside. So if we do start to lose, specifically 53k, then yes, I'm looking for lower prices. That would be here, that would be there. If it loses that, then I'm looking down lower. Okay, and obviously above us, we've got resistance locally. Above us, do we get a pullback here? Question. If not, do we get a pullback here? Question. Again, is there a short trade there? Is there a short trade there? Is there a short trade there? They're the questions that you ask yourself. Okay. Hopefully you've learned something today. If you have, do me a favor, hit that like button. If you're not subscribed, consider subscribing. And as I say, if you do want to learn how to trade like me, including all the other tools that I use, then head over to the website. Links down in the description, spitfiretraders.com. All right, again, as you were, bye-bye.